Hi aspirants, welcome back to Ashwini IS classes. Today my lecture will cover the utilization of public funds. This is lecture number 3, part 2 and part 3 combined together. Part 2 will cover funds and budget. Part 3 will cover audit and committees. In this lecture, most of the topics resemble GS paper 2. In other words, it is closely linked to DS paper 2 on topics like Indian polity, parliamentary committees and proceedings part. Aspirants don't have to reinvent the wheel by studying the topics twice. Aspirants are requested to listen my lecture carefully till the end and subscribe this channel in large numbers. All the questions mentioned just now will be covered in my entire lecture. The questions related to this lecture will be read out by me for your convenience. I am just repeating. The questions related to this lecture will be read out by me for your convenience. Please take it down. The first question. What are the consolidated and contingency funds of India? How are the two operated? This question appeared in UPSC in the year 1996. The second question is, what is Public Accounts Committee of the Parliament in India, which appeared in 1982? Third, indicate the structure and the functions of the Committee on Public Undertakings, which has appeared in the year 1992. Fourth, explain the functions of the Estimate Committee, which has appeared in the year 1995. Fifth, assess the importance of the role played by the Public Accounts Committee, which has appeared in the year 99. Sixth, examine the role of the Estimates Committee, which has appeared in the year 2000. Seventh, discuss the role of Public Accounts Committee in establishing accountability of the government to the people. This has appeared in Civil Services 2017. 9. Discuss the methods by which Parliament controls public expenditure in India 1988. Distinguish between the auditing and accounting functions of the CAG of India, which has appeared in the year 2008. Okay. Now, I begin my lecture on funds. The Constitution of India provides for the following three kinds of funds for the central government. First is Consolidated Fund of India, which is governed by Article 266. The salient features of Consolidated Fund of India are as follows. First, receipts are credited and all payments are debited. Second, all revenues received by the Government of India. Third, all loans raised by Government of India by the issue of treasury bills, loans or ways and means of advances. Fourth, repayment of loans. Fifth, all the legally authorized payments on behalf of Government of India are made out of this fund. Sixth, no money out of this fund can be appropriated, in other words, issued or withdrawn except in accordance with a parliamentary law. We will discuss Public Accounts of India, which is also governed by Article 266. All other public money other than those which are credited to the Consolidated Fund of India received by or on behalf of Government of India shall be credited to the public account of India. This includes Provident Fund, deposits, judicial deposits, savings bank deposits, departmental deposits, remittances and so on. This account is opened by executive action, that is the payment from this account can be made without parliamentary appropriation. Such payments at mostly such payments are mostly in the nature of banking transactions. Then we move to another vital topic which is known as Contingency Fund of India. The Constitution authorized the Parliament to establish a Contingency Fund of India into which amounts determined by law are made from time to time. Accordingly, the Parliament enacted the Contingency Fund of India Act in 1950. This fund is placed at the disposal of the President and he can make advances out of it to meet unforeseen expenditure pending is authorization by the Parliament. The fund is held by the Finance Secretary on behalf of the President. Like the Public Account of India, it is also operated by executive action. Before I start my lecture on budget, I would like to familiarize the aspirants with the basic terms employed in budget. First is non-recurring expenditure. Non-recurring expenditure is the one-time expenditure. Second, recurring expenditure is continuous expenditure which is needed every year. Third, capital expenditure, which results in creation of assets. It may be for loans or contributing to share capital for various entities. Fourth, plans and non-plans, which closely represent the distinction between development and non-development expenditure. Union budget or state budget provide funds to ministries, government agencies and other bodies for various purposes, schemes, projects and programs. No government expenditure can be incurred without approval of the Parliament or the concerned legislative assembly. Government spends money directly or departmentally or through other agencies to whom they transfer funds. Now we move to another topic which is budget in Parliament. How budget is presented in Parliament. Constitution states that the budget is an annual financial statement governed by Article 112. There is no term budget in the Indian Constitution. I am just repeating. There is no term budget in the Indian Constitution. Please make a note of this. Second, the budget is a statement of the estimated receipts and payments of Government of India in a financial year which begins on April 1st and ends on 31st March of the following year. Third, it provides estimates of revenue and capital receipts. Fourth, it is ways and means to raise the revenue. Fifth, it provides the estimate of expenditure. Sixth, it provides the details of the actual receipts and expenditure of the closing financial year and the reasons for any deficit or surplus in that year. Finally, the seventh point, economic and financial policy of the coming year at its taxation proposals, revenue spending and introduction of new schemes projects. Now let us discuss constitutional provisions of the budget. First, no tax shall be levied or collected except by the authority of law. Second, Parliament can reduce or abolish a tax but cannot increase it. This might be a MCQ in the next Civil Service Prelims exam. I am just repeating. Parliament can reduce or abolish a tax but cannot increase it. Third, the budget shall distinguish expenditure, revenue account from other expenditure. Fourth, a money bill or financial bill cannot be introduced in the Rajya Sabha. Fifth, the Rajya Sabha has no power to vote on the demands for grants. Then we will move to what are the stages in enactment of the budget. First, presentation of the budget, followed by general discussion. Third, scrutiny is done by the departmental committee. Fourth, voting on demand for grants. Fifth, passing of the appropriation bill. Finally, passing of the financial bill. We will now discuss outcome budget, which is a very important topic from MCQ perspective or essay type question. I am just repeating outcome budget, which is very important from MCQ perspective or essay type question. Outcome budget. This was announced in budget speech of the finance minister in the year 2005-2006. The first outcome budget was passed in the parliament on 25th August 2005. The guidelines of the finance minister in his budget speech have prescribed the following steps. First, standardizing unit cost of delivery. Second, benchmarking the standards, quality of outcomes and services. Third, capacity building for requested efficiency at all levels. Now we discuss about the outputs. Outputs have been defined as the measure of the physical quantity of the goods or services produced through an activity under a scheme or program. They are identified as an intermediate stage between outlays and outcomes. Then what is outcome? Outcomes are the end product, results of various government initiatives and interventions to discover the quality and effectiveness of the goods or services produced as a consequence of an activity under a scheme for a program. For the year 2007-2008, the outcome budget and the performance budget were merged and placed in one combined document. Now, there might be a very important question, probable question, which is distinguish between outcome budget and performance budget. I am repeating, distinguish between outcome budget and performance budget, which might be a probable question. There is another question, probable question, which is distinguish between item budget and zero-based budget. Then we are moving to the part 3, which is audit. First, we will discuss role of CAG. Before I start this lecture, I need to throw some light on audit of expenditure. Expenditure from all public funds has to be accounted for and have to pass through the audit of CAG. Major irregularities which emerge are also examined by parliamentary committees. What is the role of CAG then? The CAG is the head of the Supreme Audit Institution of India. Second, the CAG is the sole auditor of the accounts of the central government and state government. Audit means examination of accounts, transactions and records by CAG. The CAG examines various aspects of government expenditure. It also conducts an audit based on accounts vouchers and records. The report of the CAG relating to the accounts of the Union and the state are submitted to the President or Governor of the state for being laid down before the Parliament or the state legislature as the case may be. Audit may be different types like regulatory audit, which amounts to compliance, and propriety audit and performance audit. Let us discuss regulatory audit, which is compliance. The salient features of regulatory audit is first, money shown in expenditure in the accounts was authorized for the purpose for which they were spent. Second, audit against rules and regulations to see that the expenditure incurred was in conformity with the laws, rules and regulations framed to regulate the procedure for spending public money. Third, audit of sanctions of expenditure to see that every item of the expenditure was done with the approval of the competent authority. Then we are moving to another topic, which is performance audit. Performance audit examines the extent to which government programs have achieved the desired objectives at lowest cost and gives the intended benefits. There are 3 E's of performance audit. What are those 3 E's? First is economy, second is efficiency, and third is effectiveness. Now let us discuss another important topic, which is known as certification of accounts. The primary objective of financial audit is to verify whether accounts are properly prepared, are complete in all respects, and presented with adequate disclosures. The finance accounts show the receipts and disbursements of the government for the financial year together with the financial results disclosed by the revenue and capital accounts, the accounts relating to public debts and assets and other liabilities. Finally, we move to the last topic, which is social audit. Here there might be a probable question. The question can be framed like, what is the difference between a statutory audit and social audit? Now let us discuss what is social audit. Social audit is the process in which the details of the resources, financial and non-financial, used by the public agencies for the development initiatives are shared with the people, often through a public platform. It allows people to enforce transparency and accountability, thereby providing the ultimate user an opportunity to scrutinize the development initiatives. Social audit can also be defined as a tool with which government departments can plan, manage, and measure non-financial activities and monitor both internal and external consequences of the department or organization's social and commercial operations. It is an instrument of social accountability for an organization. In other words, social audit may be defined as in-depth scrutiny and analysis of the working of the public utility vis-a-vis its social relevance. Social audit gained significance especially after the 73rd Amendment of the Constitution relating to Panchayati Raj institutions. The purpose of conducting a social audit is not to find fault with the individual functionaries, but to assess the performance in terms of social, environmental and community goals of the organization. We are moving altogether another part, which is committees. The first committee we will discuss is Public Accounts Committee. Public Accounts Committee was set up in the year 1921 under the provision of the Government of India Act 1919 Montagu-Chelmsford Reform. Montagu was the Secretary of State and Lord Chelmsford the Viceroy of India. This might be an MCQ question. Please remember, this might be an MCQ question. The composition of Public Accounts Committee is total members are 22, 15 members from Lok Sabha and 7 members from Rajya Sabha. The term of Public Accounts Committee is 1 year. The election is conducted through proportional representation by means of a single transferable vote. The chairman is selected from the opposition party. Remember, the chairman is selected from the opposition party. What are the functions of Public Accounts Committee? First, to examine the reports of the CAG, which are led before the Parliament by the President. The 3 reports of the CAG are the audit report on appropriation account, audit report on finance account, audit report on public undertaking. Then we discuss PAC, Public Accounts Committee, accountability to the Parliament. Here, in scrutinizing the appropriation accounts and the report of the CAG thereon, the committee checks that the money shown at the accounts as having been disbursed legally, available for and applicable to the service or purpose to which they have been applied or charged. Second, that the expenditure conforms to the authority which governs it. Then we move on to the next committee, which is Estimates Committee. The constitution of the Estimates Committee has been done on the recommendation of John Mathai, the then Finance Minister in the year 1950. The composition of the Estimates Committee is total members is 30, and these 30 members are from Lok Sabha. No representation from Rajya Sabha. The chairman of the Estimates Committee is from the ruling party. The functions: to examine the estimates included in the budget and suggest economies in public expenditure. Then we move on to another committee, which is known as Committee on Public Undertakings. The committee was constituted on the basis of the recommendations of the Krishna Menon Committee in the year 1964. The composition of this committee is 15 members from Lok Sabha, 7 members from Rajya Sabha. Election is done through proportional representative, single transferable vote, and due representation is given to all parties. The term for this particular committee is 1 year. The chairman is only from the Lok Sabha, and the appointment is done by the Speaker of the House. The functions of the committee. The functions of the committee first is to examine the reports and accounts of the public undertakings, to examine the reports of the CAG on public undertakings. Third, to examine whether the affairs of the public undertakings are managed in accordance with sound business principles and prudent commercial practices. Before I sign off, I request all the viewers to subscribe our channel in large numbers. Do tune in for interesting videos on GS4. Thanks.